Hey there guys, welcome back. Saturday morning, thought I'd put out my weekend video. Now I put out two videos yesterday, and the video I put out towards the end of the day, I'll put a link right there in this video so you can watch that if you haven't seen it. That covers a lot of the end of the week kind of wrap on the general market review. And so this video, I might cover a little bit of that, but I'd rather just go through some trade ideas and look at some individual stocks, give everyone an idea of maybe some trades or setups for next week, and we'll go ahead and look at that. So let's get right into it. Appreciate the I appreciate the activity and the subscription. Okay, here we go. So Ford, I heard that the Robinhood people are buying Ford, and here's the thing. I look to fade a lot of those stocks that those Robinhood people are buying. That's just my natural contrarian trading style. So I definitely look to fade a lot of it. Although you need setups, you need the charts to trigger any kind of entries that you get. But it perks, I perk up when I hear that they're buying something, because it's just the theory of they're all momentum traders essentially. So a lot of them aren't charting. They're not using technical analysis. They're just buying something because it's going up, and as long as it keeps reaffirming that it's going up, they're happy. But it doesn't give them an idea of when things might turn. And I heard they were buying Ford. So here's what I see. I popped it open, charted it up. Here's what we got. We've got, the first thing is, here's your March lows. We've got an uptrend. And that uptrend is intact. There's nothing wrong with the stock. It is completely intact. And I could probably adjust this slightly down. But the stock's intact. And, it is an uptrend. So still in an uptrend. But when I zoom in here, I noticed this instantly. You got an island cluster top reversal that is intact. And this one did play out. So maybe it's finished. But here's your island. Here's where it would have gapped down right here and created that island top. So if you were going to short, this would have been your entry right here. And, you had the kickback rally right there, right to the gap, and then it rolled over. You can see from the rally. So from your entry down to the kind of the lowest point, it fell up 10%. So maybe that's it. That might be the only trade. But you can see we did another kickback right to this gap right here, and we're holding resistance, kind of a double top right there. You can see tagged it, starting to roll over. So what I'd look for, there's nothing to do on this one yet, but what I would look for is a break of the trend line. If it breaks down, we start to, you get an impulsive breakdown of this trend line. That would be your short entry. And then if it, and then it could obviously break to the upside. If it breaks above this double top here, then I'd look for it to take out this island cluster pattern right here above $7. So a break above 7, a break and a close above 704 probably sets us in motion to run up to 774, $8, and then a breakdown, depending of when this trend line comes into play, would set this in motion to the downside. In case I didn't cover this one, I don't remember, but this is the semiconductors. Here's a daily chart. You can see nice clean uptrend right here. If I go to the hourly, it shows a little cleaner. Lots of reactions along this trend line. It's not coming off the lows, but sometimes off the very lows, you have to kind of throw that out because that is potentially just the momentum overshoot. But reaction here, reaction. You can see reaction here, and then we broke, and then this back test here confirms that trend line because this is where it traded right up to and tested resistance and failed, starting to coil back up again. But we are failing these back tests. We've failed this one, so we've had a clean back test. What I'd look for, I think this is going to roll over now. This, you could have shorted on the breakdown here on the back. This wasn't a full back test, but it was close. This was the best shorting opportunity, obviously, this full back test. So now, if it recovers the trend line, you stop out. If it breaks down, you just continue writing it down. And I'd see some support down here at 270.57. Could have a little bit of support right here at 272.68. So we'll just watch this. But ultimately, looks good. Looks like it's going to roll over. going back to the daily chart, you can clearly see the divergences. Here's the PPO, and I like to use the dailies to find the divergences. The hourly is just there's too much vibration and too much noise to really spot trend changes, or the divergences on the daily can indicate they're better for swing trading. Hourly can work for day trading, but the daily for spotting divergences I think is the best for swing trading. And you can see clear divergences where you've got prices moving higher and yet the momentum is moving lower on both the PPO and the RSI. So these are divergent highs. Every time the price makes a new high and the momentum doesn't make a new high, it's creating a divergent high price, which signals opportunities to short. So this one looks like a great short. Basically, it's broken the trend. It's doing a full back test. It's rejected, and it's got negative divergence. So in general, that's about as good as it gets. There's nothing says it's going to play out, but that's pretty good. Here's Philip Morris. So Philip Morris had that false breakout right here, and I was pointing it out in some of the videos. Here's your downtrend line on the daily in Philip Morris. So it's been in a bear market, and it looks like it's continuing. And you can see here was the breakout that I said, okay, we're breaking out, but it's not impulsive, so we got to watch it. It has a high probability of failing. And yes, it did fail so far, so you can see recovered. So back within resistance, it's a false breakout essentially. So to me, that looks bearish. And it had negative divergence as well. You can see here on the daily, the prices, this right here was a divergent high. You see it had made a higher price on the daily chart, but the momentum was not making a higher indicator. So it had negative divergence. This one basically seemed like it had a high probability of failing. And that's what I pointed out when I was looking at this one. I said it has negative divergence, so we do have to watch it. And it didn't break out impulsively, so not what we want to see for a bullish move. To me, this one still looks bearish. Netflix. All right, so coming off the March lows here. Here's your daily. We do have negative divergence in the PPO, but not the RSI. I don't see it here in the RSI. It kind of took out whatever was in play right here on this latest spike. So that's something to take note of. Not, the more indicators or basically the more indicators you have, the better. The SOXX looks a lot better for a short, but we have broken trend. So if you go to the hourly here, here's your break. Here's your March lows, reaction. Here's your breakdown and kickback rally, overshot it, took it out a little bit, and so it's not impulsively breaking down. So this is one to watch. This could recover or it could move down. We'll just have to watch. But as of right now, it is, it has broken support, was not able to recover it even on Friday, because Friday's price action was really just about 3 stocks. It was not about tech in general. It was about 3 stocks. And yeah, Netflix was not participating in Friday's price action. This one's a setup for anyone who's not in the trade. Could be a good short. Now my trend line is not, I don't love this trend line. Here's why. I prefer if it could come down and capture some of this price action down here. But I just can't make a clean trend with both of these waves here. This move up was pretty clean, and then it gapped up and created this wave here. And I've just been having a hard time making something that makes sense. So basically what I see here is reaction, breakdown, and a back test. And here's actually your first full back test, basically right here. It overshot that resistance, failed, and came and closed below. Looks like it's ramping up again. Maybe it wants to do a full back test and close up around here. So that's something to watch. That would be an objective area to short if you're able to grab that price if it gives it to you. Going to the daily on this one, negative divergence. You can see it clearly right there. So These are divergent high prices, which means they have a high probability of failing, which is what you want to see, especially when you're below support. So that's something to watch. And you could make this trend line on the daily coming off the March lows. Here's the low from March. Here's a reaction, and then we had another third reaction just now. So we'll leave that one up there too. This could be a secondary price channel that it's making, but you know, I didn't have this trend line until I just had this third reaction. So we'll go ahead and watch that and see if that works out. Here's Adobe. I'm short this one, and this looks like it's good. Everything looks good here. It's just chopping sideways. And remember, you know, swing trading is not, you know, you're going to have prices move against you here and there, but ultimately, as long as it stays within the pattern, then it should continue to work. And this is a daily chart. So here's your daily uptrend line here. You can see it moving up. We broke nice impulsive sell, you know, red bearish engulfing candle, and the confirmation came in the form of a gap down right here. So it gapped down below support and then closed, you know, below the previous bearish engulfing candle. So that was your confirmation. And here's your kickback rally. Again, this market you're seeing a lot of these kickback rallies. The market seems to love to do these kickback rallies right now. I'm seeing it in almost every trend line that seems to break down. You're getting these kickback rallies. And it just goes to show the mentality of the market. The dip buyers see any dip and they're buying it. It doesn't matter if it's broken support. So there you go. There's your kickback rally. And then the market, you know, the people who are actually watching the charts, moving the big money, they sell it down. It looks like it's popping again. It's just kind of chopping sideways. So we're just consolidating, kind of making a sideways pattern, and we're just waiting for this thing to break down. You know, that's about it on this one. Negative divergence, of course, in the you have the negative divergence right there, you know, on the daily, and you know, it's starting to break down is the point that I'm trying to make. You can see, you know, this isn't so much negative divergence because you made a new lower low right here, but it was intact right here, and that kind of burned through a slight. It's lower. It's a lower low right there. So this was a divergent high. It's just not much lower, but it is negative divergence. All right, so Tesla. This one's tricky, and I'll say right now I'm not a huge fan of trading this one. This is a cult stock. It can act irrational, and so sometimes it's not the easiest one to chart, but does look like it's maybe going to start rolling over. And here's what I got. Here's what I see. On the daily chart, you're coming off the March lows. You have a reaction here. You have a reaction here. And then you broke that support, but it wasn't impulsive. And then this thing just ramped straight up and did a full back test of that trend line right here. And that was it. So that's your first back test. It was rejected. And now it's just going sideways to down, basically. You can see bearish. Here's your outside day bearish engulfing reversal candle. And we got confirmation. So bearish engulfing, we engulfed the, you know, multiple candles, 3 days it looks like of the previous candles, and then the confirmation came in the form of a gap down. So gap down and sold off, closed lower. So that's your confirmation candle. You're always looking when you see reversal candlesticks. The way you use these like dojis or reversal candlesticks is you always look for confirmation. The next candle should confirm the direction, and if it doesn't, then you don't necessarily want to use those candles. The next candle can be a neutral candle where it's not necessarily confirming or denying, but you don't want to see any candle take out the reversal candle before you get confirmation. Otherwise, it's just non-confirming. This one is confirming. Then you have a kickback rally, but it's not. This is it. You know, it gets up to 1550, and the sellers are stepping in. On Friday, they sold this thing down. So even though the market was up, everybody feels like tech or whatever was doing good. This thing was showing relative weakness, I guess, in terms of you know, what the tech sector was doing and the S&P 500. So keep an eye on that. If this breaks here, then lots of gaps to fill on this thing. So there might be a trade to, you know, short this down to 1230 and then down to 1130, and then there's a big gap all the way down here that never got filled at 650. So the next, if there's a big liquidation in this, it could easily get down to 650. Probably hold support around that price. Okay, here's DraftKings. And this still looks good. Looks like it's reversing and heading lower. You've got the uptrend right here. You had the breakdown right here. We broke. This is a daily chart. Did a couple kickback rallies where it tested, and then it failed and rolled over. And so just like in an uptrend, you look for support to buy out at support. In a downtrend, you look to short at resistance. And so this is what I got right now. You've got this trend line right here creating resistance. We're up near the top of the range. I'm down here at the bottom. I've got support downtrending. So if this wants to roll over, then it's got a big move down somewhere in here to tag resistance. From where that's at, that's a 30% drop or so. So that could easily play out. And yeah, just in general, this one looks weak. Relative weakness today or on Friday when the market and tech was going up, this thing was going down 4%. So looks weak. Looks like it's going to continue. Now, a break to the upside would signal that this downtrend's done. So keep an eye on that. Just want to point this out. Sometimes on the weekend, I get better looks at things. Amazon, I don't know, but maybe this is a triple top. You've got these 3 candles, 3 rejection candles, on the daily chart, rejected, rejected, rejected. Even though Amazon closed up, it was still sold into at the open. So maybe that's a triple top. We'll watch that. And I'm going to wrap up with Barrick Gold here. Anybody who's been following me for a while knows that, I've been calling to buy Barrick Gold, about a year and a half ago. I was telling everybody to buy the stock all the way down here in this price support area when we were hitting support. Looked good. And then I pointed out the breakout right here of the channel. So I've been onto this one for a while. And, even if you got it at the breakout right here, it's up 130% or so. But now it's up, and now everyone's interested in it, and now everyone's interested in gold. And so that's when I start looking, the other way kind of. But there's nothing wrong with this stock. It's in an uptrend. You can see on the daily, nice clean uptrend right here. And it's holding that uptrend. So, you could just mark that out, draw it out, and buy at support. Wait, and, eventually this trend will break. We don't know when. However, it does have negative divergence, and that's something that I always keep an eye on. You can see it right here, and you can also see it right there, negative divergence. So this high, this price action right up in here is not running higher on the same momentum that it had in the past. That's all that shows. So it's just potentially points out that there might be a breakdown coming soon. And then also on the daily, you can see if I roll out here, this shows pretty cleanly major support / resistance right here at this 2820. You can see it goes all the way back here, and how I pinpointed this before was this cluster. You could see it right here back in 2013 where it was holding that, and then it impulsively broke down. So that was major support. So when we came back into it recently, as I scroll over to it, that's where I sold out of my position, was right there at that 2820, I believe, is where I sold out. And I had a pretty sizable position on that one, so that was a great trade for me. And then it pulled back. We did get a pullback. I was looking for a little bit more. I think I had it marked at this $20 level where I was looking for it to find support or tag. And it just never got down there. So in general, that's bullish. I mean, to not get down to the support that you're looking at is bullish. But, we have divergence now. We've made a high. We've overshot that major resistance. Is this a false breakout? Does it stop here and roll over? And if it does, maybe we do get a run down to this $20 range. Or we could look at longer term support on this thing, which maybe is all the way down here around the $16, or depends on when or if we get down there. I don't know if it's going to get down that far, but you can see going back off the 2015 lows, I've got a reaction down here. This is your bull market, your bigger bull market trend line. You've got a reaction down here, reaction here, And then just recently when they had the liquidation event, it ran down and tagged that again. So that was your last tag of that major bull market support line, and that's why it held that support. And so this thing might just kind of break down a little and then work its way higher. It might not come back and see this major support line for a year or so. We don't know. I'm not going to wait to buy this. When it gets down here, I will add to the position that I start, but I do think we could probably get down to this 2050 level if there's going to be a breakdown. But as of right now, still in an uptrend, still holding support, and there's nothing bearish about the price channel. There is negative divergences signaling a potential breakdown's coming. So that's all I got. And then finally, to point out the dollar, someone was just asking me, they said they were confused about the dollar. The point that I'm trying to make, here's what you got to do. On the weekly chart of the dollar, we've had a breakdown. So here's your weekly support channel on the dollar. We've had negative divergences on the weekly chart in the dollar for years. We now have an impulsive breakdown on the weekly and the monthly. And so this is a big change in bigger picture ideas and bigger picture setups. But that doesn't mean that the dollar is just going to continue to just plunge. Oftentimes when you have that first initial move down, you get the back test. And that's what I think we're going to get. I think we're going to get a back test of the dollar. It's going to find some strength, run up and tag this, maybe chop around here, and then roll over. That's what I'm looking for. You can see on the weekly, big wick right here. So the buyers were stepping in. It sold off and the buyer stepped in and bought it up. So we'll watch for that. And going to the daily here, we've got bullish engulfing. So that is a potential bullish reversal. And if we get confirmation, then maybe we run up and tag this, do a back test. So that's what I see in the dollar. I see longer term, the dollar is weak. Shorter term, the dollar has the potential to find some strength. And if it does that, maybe that comes with a sell-off in the market. Maybe that comes with some weakness in gold. You just have to watch for what's happening when you actually get it. But we're keeping an eye. I'm keeping an eye on the dollar to see how other markets react, and we'll point that out as we see it. Okay, that's all I got for this video. If you guys have stayed this long, thank you. If you have any stocks you want me to look at, throw them in the comments. I'll try to take a look over the weekend and see if there's anything that's, any kind of setups for next week. I'm always looking for new trade ideas and new things. So if you guys are watching something, leave it in the comments below. I'll take a look. Appreciate that. Catch you on the next one.